You're probably familiar by now with the idea that home prices are softening nationally. And while prices have not turned negative compared to 2024, at least at the national level, the momentum in enough of the country sure seems to be in that direction by later this fall. That shouldn't be surprising to anyone who has been paying attention to the data. The data that might surprise you, however, is that there have been gradually fewer home sellers each week. Earlier this year, there were more home sellers each week than in 2024, and that was contributing to rising inventory. More sellers in the face of weaker demand for most of 2025 so far. However, that growth has pretty much evaporated. Each week now, there are no more sellers than there were last year. And that even looks to switch negative. This suggests that we'll soon have fewer home sellers with fewer new listings each week. Home sellers, it seems, are growing tired of a sluggish housing market. They don't like the price trends they're seeing, and they are choosing to sit it out until conditions improve. So we'll look at that data today. Staying put is not just a housing phenomenon. We're staying in our houses, yes. We're also staying in town. We're staying in our jobs longer than we used to. I've called this phenomenon the Great Stay. On Friday, we saw some weak jobs numbers from the BLS. Even though unemployment remains low, hiring is very low. I saw someone call it a nationwide hiring freeze. So if you have a job, you're much less likely to quit to find a new one. You're much less likely to leave your good gig and leave your cheap mortgage to move to a new town in search of a better job. The reality is that a frozen job market contributes to a frozen housing market. We could see the Great Stay in those falling weekly new listings numbers that I mentioned. Having fewer sellers each week has implications. It implies a cap on inventory. The biggest housing bears assume that a flood of new inventory is imminent, and that that flood will exacerbate price weakness. So that's a reasonable perspective to have. And so if we were to see new listings picking up, I definitely want to know it. But we don't see any flood imminent. In fact, a renewed seller drought seems more likely. So I'm Mike Simonsen. I'm the chief economist for Compass. In these videos, I look at the U.S. housing market data every week. Our goal is to help everyone understand what's actually happening in the market right now so they can make the best decisions when buying or selling a home. In these videos, I use data from Altos Research. In the coming weeks, I'll be able to add insights from what we see at Compass, the largest real estate brokerage in the country by sales volume. So let's dive into the data here at the beginning of August 2025. Let's start with the new listings data today. So if you're selling now, in most of the country, you already know that there are plenty of homes on the market. Inventory is high. For most of this year, there were more sellers feeding into inventory. But as I said, that's changing. The good news for potential home sellers is that there are fewer competitors coming to market each week. There's plenty of competition out there already, but that doesn't appear to be accelerating. So this week, there were 70,000 single-family homes, new listings unsold, plus another 12,000 that are new listings that are immediate sales. So that's essentially unchanged from last year at this time. In the chart here, the blue line is this year. And you can see that while most of the year there were more sellers than the purple line, it's now roughly the same level as last year, and fewer sellers than any recent year except 2023. And that orange line is 2023. The gray lines are the past year. It would be totally normal to have 80,000 or 90,000 new listings of single-family homes during the last week of July, but we only had 70,000 this week. Fewer sellers opted to sell. This trend has implications for inventory and pricing. Inventory can grow with weak demand or with a surge in supply, or both. We know that home buyer demand remains light, with high mortgage rates, of course. We've had no easing of mortgage rates for affordability, so that trend is the same. Inventory is climbing. If that weak demand were to be met with increasing supply, like it was in, say, 2022 in 2006, that's a very bearish scenario. So we watch these new listings levels each week. The takeaway for the new listings data this week is that there are fewer sellers now coming to market. This number is dropping, so to fewer than last year. People are staying in their homes, and they're staying in their jobs, and they're staying in their towns. Supply is a measure both of the new listings volume and the total unsold inventory. The unsold inventory is the supply side of this equation, and the new listings tells us how fast it's changing. As demand remains light in 2025, homes are taking longer to sell, and the unsold inventory is building. That's no secret. There are sufficient homes on the market to create opportunities for buyers, but sellers aren't showing tremendous urgency either. So in this chart, we're showing 10 full years of inventory. You can easily see the three eras. There's a pre-pandemic from 2015 through 2020. Then there's a pandemic boom era. And now there's 3 years post-pandemic from the first quarter of 2022. During the pre-pandemic era, we generally had low and falling interest rates. As a result, we had falling inventory during that period. By the time the pandemic hit in March 2020, we had mortgage rates drop to record lows and inventory drop to record lows. It's taken 3 years of high and rising mortgage rates to build inventory back up to the pre-pandemic levels. There are now 867,000 single-family homes unsold on the market. That's 26.6% more than last year at this time across the country. There are another 230,000 condos on the market for 1.1 million total unsold homes right now. So in this chart, I've highlighted the band from about 800,000 to 1.2 million single-family homes, and you can see that easily see the old normal range there. You can also see how current inventory levels are back in that normal range finally. The takeaway for supply this week is that inventory is growing, but it's growing less quickly than last year. There are fewer sellers each week, and that's contributing to a cap on supply. Inventory, though, probably has 10 more weeks to climb this fall, and unless there's a dramatic drop in mortgage rates, which would pull potential buyers off the sidelines. So let's switch to home sales. We counted 68,000 newly pending home sales this week. That's 3% fewer than a week ago, but continuing the recent trend, coming in a few percent more than last year. 3.5% more home sales contracts started this week than the same week last year. I expect completed transactions in the coming months, to report slightly greater home sales than in 2024. Based on the number of homes that are in contract now. Since the weekly pending sales have been coming in slightly better than last year, about 3 to 5% more each week, year to date, we're now counting 2.4 million sales so far this year, which is pretty much exactly where we were last year at the start of August. Sales in 2025 have finally caught up to sales from last year. It is significantly fewer sales than recent years, but at least it's not falling anymore. Based on this trend, I expect that next week we'll be able to report growth over 2024. As a reminder, these are the newly pending contracts. So homes take 30 or 45 days in contract before the sale closes, and contracts can fall through. So this is a leading indicator of future sales. It is the earliest visibility we have for August and September home sales. And contracts can fail, of course. So if contracts fail at a higher rate than last year, maybe the pending sales increase, but the closed transactions remain fewer or the same. I'm working on getting you some visibility into that potential. In this chart, you can see this year's blue line continues to land just above the 2024 purple line. This week was about 3.5% more pending sales than last year. It's not a ton of growth, but it has been consistent. No sign of any real growth in home sales, of course. With the weak jobs report last Friday, mortgage rates had a little temporary dip, but it's not enough to move the needle yet for buyers. Keep your eyes out there. On to home prices. For 3 years, the story has been home sales are down, but home prices hit new record highs. So that trend seems likely to end soon. Inventory is sufficiently high that home buyers finally have bargaining power they've missed for a long time. Home prices are just barely above last year this time. By the fourth quarter, there are plenty of opportunities for prices to be averaging lower than 2024. The median price of single-family homes in newly pending in contract this week is $399,000. That's unchanged for the week and is just 1.5% higher than last year at this time. Home prices last year, see the purple line here in this chart, is last year. They had some pricing resilience in the back half of the year. When mortgage rates dipped last year close to 6% in September, it triggered enough buyer urgency to buoy prices. You can see that inflection point in the purple line here in September of last year. So that pricing resilience is unlikely to recur this year. There are a lot more homes on the market now. If we finally get lucky with a big drop in mortgage rates, that'll definitely jumpstart demand. And maybe the 2025 finishes with slight home price appreciation over 24. There are lots of scenarios, though, where the headlines are 2025 home prices finish below 24, even as the sales rate inches higher. So I'll wrap today with the leading indicator of future sales prices. So this is the price reductions. There are now 41.7% of the homes on the market with price cuts. That's actually unchanged from a week ago, and it's several percent more than a year ago. In this chart, you can see the normal seasonal cycle for price cuts. Fresh new inventory comes on the market in spring, so there are fewer price reductions. Then by April and May, if you haven't had your offer, sellers start reducing their asking price. Price cuts peak in the fall before the holidays. Last chance. Then the stale inventory is withdrawn and the cycle starts again the next year. So price reductions has a very reliable seasonal curve. In this chart, each line is a year. Notice the blue line is higher for 2025, more listings with price cuts than any recent year. There are 13 years in this chart. The steeper the climb, the steeper the line is climbing here, the more sellers each week that are cutting their asking price. So the orange line here is 2022, and it's very notable. That year started with record few price cuts. In the first quarter of 22, buyers knew they were at the tail end of ultra-cheap mortgages, and they were bidding on everything. As a result, very few sellers at the time needed to reduce their price. By March, sellers already felt the changing market, and price cuts started to elevate. That steep rise in the orange line, April, May, June, July of 22, was dramatically slowing market. In the last few years, we've sometimes seen bad surprises with mortgage rates, and we can measure immediate changes in the price reductions when rates spike. So you can see it here in the orange line for October of 22. At that time, mortgage rates jumped to 7.5%, which is very unexpected. Sellers who were not properly priced felt the shock of buyer pullback immediately, and they had to cut their asking price. So the takeaway for the price reductions data is that we know the market is slow, but this data is showing that it's not deteriorating. Things are actually fairly stable. Rates have been stable, high, but very stable. So consumers are stable too. The great stay is visible right here in the price reductions data. Until affordability conditions improve and job market conditions improve, potential home sellers are going to have to know this reality. So that's all the data we have time for today. The great stay continues with a slow jobs market, and that leads to fewer new listings, which will ultimately keep a cap on inventory. More next week.